Good evening and welcome to this session of the live virtual classes conducted by the Board of Studies Academics of the Institute of Chartered Accountants of India. In the last class, we have gone through the concept of audit and auditors. Right. We have covered quite some ground. You had certain doubts and worries also. So we clarified all that. We have covered a lot of ground there. If you still have any doubts, you can definitely raise it both in the query pad as well as in chat box. At frequent intervals during the session, I will solve it for you. So yesterday we finished appointment of auditors to an extent. And we came to the stage where we saw the procedure for appointment, right? Now, we also saw that before appointment, the company should write to the auditor asking him for a written consent and also a certificate on certain matters, mainly that the appointment, if made, will be in accordance with conditions as may be prescribed. What are these? What is the contents of these certificates? First, the auditor should see, usually we give our consent together with the certificate. Don't make it into two parts. So give a simple consent and then we say we have certified the following. And we also certify. Certificate. Basically, a certificate is saying that these are all the facts. And the individual or the firm, as the case may be, is eligible for appointment and is not disqualified for appointment under the Act. So under the Act, we saw various disqualifying occasions. The Chartered Accountants Act, the Chartered Accountant Act also prescribes certain grounds when a member may be debarred or not allowed to do. So that's why we can't just like that go by the Companies Act. We are also bound by the Chartered Accountants Act 1949. Those of us who are in practice have to abide by that also. We are bound by that. In fact, primarily we are bound by our institute, which is the mother body. So Chartered Accountants Act will not contradict the Companies Act. So it will be addition to. So those disqualifications under the Companies Act are anyway not covered. Addition to that, the Chartered Accountants Act would have prescribed certain conditions for holding the COP, for being eligible to sign, etc. So those also have to be complied. And the rules or regulations made thereunder. So we have to certify that we are eligible. Mainly, there is, if at the end of any disciplinary proceedings, the member has been debarred, then he cannot be appointed. Therefore, because one of the conditions for qualification for an auditor is being a member of the institute. So once he is debarred, his membership will be removed. So he should not. Okay, that's the point. The proposed appointment is for the term provided under the Act. There is the term which 5 years or whatever. The proposed appointment is within the limits laid down by or under the authority of the Act. So we already saw that the limit is 20, not including certain types of private companies. So you need to keep track and assure the company that if this appointment would not violate the limit. In case it would, then you may want to relook at reshuffling audits forward to ensure that the partner of the firm signing this audit would not exceed the 20 limit or the individual would not exceed the 20 limit. List of proceedings against the auditor or audit firm or any partner of the audit firm pending with respect to professional matters of conduct. Okay. As disclosed in the certificate is true and correct. In case there are any proceedings, you should distinguish between a concluded disciplinary action and a proceeding. Suppose there might be a proceeding against the auditor. We may have to disclose it and say we have such and such a proceeding is happening against us. Like, okay. So this is a statement of facts. Right? Now, who will appoint the auditor? We saw the members will appoint. It will be recommended by the board. But for certain types of companies where it is necessary for them to appoint an audit committee. So this particular topic is not in your syllabus. Section 177 is out of your syllabus. You may study it later on when you take up the self-paced module on your own for the final examination. But for the sake of connecting or the dots, as we call it, I'm giving this information, not relevant from exam point of view. But if I were to use that name audit committee, so you will ask me, what is that audit committee? So don't bother about the nomination and remuneration committee. That is absolutely irrelevant for this topic. But the same rule applies to both. Therefore, in my final lectures in those days, I used to combine these two, right? In those days, when it was a compulsory paper and all, and not self-paced module, I used to do this. Okay, so the point is, certain types of companies, as you can see, have to appoint an audit committee. Okay, so what are they? All listed companies as usual, public companies as usual. Companies that are required to appoint at least 2 independent directors. So that list is there. Don't bother about it. Okay, shall constitute the following committees, one of which is the audit committee. Basically, the audit committee is meant to oversee the internal controls with respect to the financial management and the financial statements. So they would be reviewing the internal audit report. They will be reviewing the internal control. Fraud will be reported to them. Later on, you'll be seeing fraud reporting. In some cases, will go to the audit committee, wherever there is an audit committee, etc., etc. So this audit committee will also be responsible for fixing the remuneration of the, selecting the auditor. Thereafter, it will recommend it to the board, and the board will recommend to the shareholders who will appoint and fix the remuneration. So certain companies which are expected to have at least 2 independent directors. Okay. So listed companies, this part of it is just for your knowledge. The idea is certain companies are required to have an audit committee. Listed public companies, definite. Other companies, other than listed, all public companies with a paid-up capital of 10 crore rupees or more. So listed companies, whether more than or less than, they should have independent directors. Other than listed companies, public companies with paid-up capital of 10 crore or more should have 2 independent directors. All public companies having turnover of 100 crore or more, only public, 2 independent directors. All public companies having in aggregate outstanding loans or borrowings or debentures or deposits exceeding 50 crore rupees or more, right? So these 3 categories should have at least 2 independent directors. Such companies which are required to appoint at least 2 independent directors, and of course listed public companies, should constitute an audit committee. See, so many committees are there. We already saw now one committee, the Corporate Social Responsibility Committee, CSR committee. Similarly, there will be an audit committee. Similarly, there's a nomination and remuneration committee for fixing the remuneration of directors, selecting director, right? Should I remember this? No. From exam point of view, no. But I'm connecting the dot here. From now on, when I use the word audit committee, you will not be shocked or surprised. You will know that this is nothing but some public companies and listed companies need to appoint an audit committee. One of the jobs of the audit committee, okay, is to select the auditor. Okay, so the board can do it, but where there is an audit committee, it is the audit committee which is the competent authority to take into. So the competent authority where the company is required to constitute an audit committee under section 177. So the minute I come here, immediately you will ask me, what is this 177, man? Tell us. Therefore, I'm telling. You understand? Some of you will get angry if I go out of topic, but that is my style. In Mahabharata, what happens now? One story, main story will be told. Suddenly, one person will be mentioned or one thing. Immediately, all the people who are listening will ask, hey, what is that? Who is that? Tell us about him. So, at that point in time, Sugha Brahman will or Vaisambayana will stop the original story. He'll keep it pending. And he will start this new story about this guy. That will go on. Then come to the end. Then he will say, we left off. No, there, this is the guy. Now we start again. And he'll go on. Okay, like that, there are many branch stories in the Mahabharata. Which is why the Mahabharata is 24,000 slokas, such a long epic. Okay. So many stories are there. So like that, at this stage, I can't go back to 177. Therefore, I have explained 177 and I have come here. Okay. So, audit committee. So, where there is an audit committee, the audit committee is the competent authority. The role of the competent authority or responsibility of the competent authority is to take into consideration the qualifications and experience of the individual or the firm proposed to be considered for appointment as auditor, and whether such qualifications and experience are commensurate with the size and requirements of the company. So they will maybe call for proposals from 3 or 4 audit firms. Then they will compare. Then they see their size and all. Also the quotations received, whether they are. And finally they will select whether an auditing activity can be treated like any other vendor, and they can be asked to submit quotation against or tender, etc. Different thing. I think it is not correct. Many government companies indulge in such activities because of they don't know better. Say they will treat the performance of an audit as a similar to construction of a toilet. It is not. There you can have tender, L1, etc., etc. But in an audit, it is the expertise that is coming will differ. So it is very difficult to judge like that, L1 and all. And so they'll put 100 other conditions and all that. So anyway, it is their call. But all I'm saying is the audit committee should do that. So of course, they can call for proposals from many firms to judge which is competent. If you can't go for L1, see, you want to hire a particular company firm, you get that expertise. Now for that, you have to pay. It's as simple as that. So if you don't want that expertise, you are okay with something less, obviously you'll get lesser quotations. You can't expect the same quality. Between two people whom you feel have the same expertise, if one is more, you can. But comparing like that is apple to apple is very, very difficult in our profession. Because of the constitution of the firms, the composition of senior persons and all, and the experience of the partners. So generally in our profession, in practice, experience seems to have a lot of value. So the age seems to be very important. We are like wine. As we become older and older, we become more valuable. It is unfortunate that youngsters know more because they have studied. They have just come out of the exam hall. They know everything section by section. They will rule by rule. They will touch like chuck like that. But experience. So this is unfortunate. I'm not supporting this view, but what to do? Suppose the company is not required to constitute an audit committee, then the board of directors automatically will be the competent authority. The role of the competent authority is to fix the audit and all that, and they should also see whether any pending proceedings are there, and also call for such other information from the proposed auditor as it may be. Fine. Now, once the auditor is selected, the competent authority, if it is the audit committee, will recommend the name to the board for consideration. Then the board only will decide. Audit committee will recommend to the board. Then the board will in turn decide and recommend to the shareholders, who will appoint. At the annual general meeting, one of the ordinary businesses to appoint or reappoint the auditor. Okay. So that is one of the ordinary business requiring ordinary resolution. OBOR. Okay. Ordinary business, ordinary resolution. In case of a company not required to constitute an audit committee, the board itself will consider and recommend. And finally, the members in the AGM will appoint. Right? Let me see the chat box. Yes, many of you have greeted me. Mr. Adil Khan, Ms. Pooja, Ms. Geeta, Mr. Anil, welcome sir, Linga, G, and audit committee. No. Committee of the board. The Mr. Syed Hussain, the audit committee, see, the board is, say, let us say the board has 15 people or 12 people. Out of that 12, committees are formed. Nobody from outside. Auditor and all can never be a member of the audit committee. No. If at all, I will be you or me will be an invitee. So if you are the internal auditor or as a statutory auditor or an internal auditor, I will be the invitee. I will be invited to the audit committee meetings. Usually they will invite, not always. Once in a while they say, Mr. Srikanth, why don't you come? Our audit committee would like to have a chat with you. Just over a cup of coffee, biscuits and all. We will just talk and I will give my view. They will generally ask, what do you find? How do you find the financial controls and all? We will give our views. In case there are some long pending issues, including tax and taxation issues, they will want in principle view. Because at that stage, they will take a call and say, Mr. Srikanth, do you think you could do this? So definitely, boss, I'll do it. But it will be a separate assignment, which I am entitled to do. This is not a prohibited service. Tax advisory services, not prohibited service. Tax audit, not prohibited. Statutory auditor can be tax auditor. Statutory auditor can perform tax advisory services. Certification, why not? There are certain certificates that only statutory auditor can give. Other certificates also we can give. Certification. These are services that allied. That is why they will ask you to clearly show what is the fee paid for statutory audit and other services. So it's not that you cannot render any service. It's just that certain named services in 144 cannot be rendered by a statutory audit, right? Because again, you see, tax audit follows. If you statutory auditor is having, which is why your Form 3CA, 3C B also very clearly they mention so-and-so statutory auditors are certified. Like that, even if the tax auditor is a different person, he has to mention who are the statutory auditors, right? So please understand the audit committee is not a third person. Outsiders cannot be. Okay. So only members of the company will not be part. Only board, members of the board will be part. I don't understand what you mean by the next comment. So kindly elaborate. I will try to do my best. Okay. See, if you can understand this, company has a board of directors. Such a board, they will form many committees. Committee means from that board of directors, they will select 2 people, 3 people, 4 people. Those 2, 3, 4 will become a committee. Various committees are there. So is this clear, Mr. Syed? Or do you need any more elaboration? Okay. So like that audit committee. So let us say that there is a board of directors. 12 people are in the board. Out of the 12, 4 will become. In fact, the audit committee should have 1/3 of the audit committee. 2/3 of the audit committee should be independent directors. 2/3 of this audit committee. That's all not necessary for you. It's not in your syllabus. You only come to 177, you see all that. Don't worry about it now. Okay. Right now, what you need to know is the audit committee is a committee of the board, like the corporate social responsibility committee. And that committee has the responsibility of, that is enough for you. Beyond that, do not get into audit committee and, waste your time. Okay. I have not interlinked tax audit with interlinked audit committee with tax audit, sir. Sir, statutory auditor can also do tax audit. That's all I mentioned. Audit committee has nothing to do with this. Okay. I was just mentioning that the audit committee meetings, the topics for discussion would range from internal control, financial control measures to sometimes some long pending taxation issues will be there. There is see, I'm talking about large companies here. Large multi-crore companies where there are independent directors, board of directors, Then in those cases, professionals will be there. All sorts of decisions will be taken. They'll get into deep trouble, what to do. They would have asked us and we would have told them also. So that part of it is tax advisor. Statutory auditor can be the tax auditor. That's what I said. Okay. And the audit committee will engage itself in all these things, everything. Tax advice, taxation issues, and how to solve them. Okay, and all that. Compliance with the tax. That's one of the audit committee agenda. Compliance. So generally the CFO has to sit there and he has to give a compliance commitment. All laws are complied. For the last quarter, everything is done. So generally they might ask the statutory auditor to just tell, yeah, it's done. Like the tax auditor to tell us whatever. So see, each audit committee defines its agenda. But broadly, these items are to be. Nearing the annual general meeting, there will be one audit committee followed by a board meeting. So before that board meeting, this audit committee will meet and they will recommend the auditor. That is all you need to understand. Okay. Just because we are seeing 144, I wanted to clarify that tax audit is not a prohibited service. It can be done. Tax advisory is not a prohibited service. It can be done. Okay. Certification is not a prohibited service. It can be done by a statutory auditor. That's all I was trying to clarify. The NFRA has come. NFRA. See, we already saw companies in respect of which NFRA is applicable. A similar slide was already discussed in accounts. So, whenever the NFRA is involved, the appointment of auditor should also be seen by them. So, that is also there. Companies with securities listed, we already saw this. All listed companies, unlisted public companies with paid up capital greater than or equal to 500 crores, annual turnover greater than or equal to 1,000 crores, outstanding loans, etc., greater than or equal to 500 crores. They are all coming under NFRA. Special companies like insurance and banking companies, companies referred by CG in special interest, a body corporate incorporated outside India, which is subsidiary associate of any of the above. For that, there is a condition also we saw. You know that, na? So, whenever a company comes under NFRA, the disciplinary proceeding for that auditor will happen by NFRA, not by ICAI. So the auditor will have to, if anything happens, he will be hauled up by NFRA and not by the institute. Okay. So what they said, we don't know whether you are coming or not. You tell us. So on that particular time when NFRA was introduced, they said, within 30 days of the commencement of the NFRA rules, all companies, every existing body corporate should confirm that it is not coming under NFRA. Okay. And NFRA 1 was filed, but we are not coming under NFRA. Point is, once it comes under the NFRA, then the auditors review, if any complaint, etc., it will be heard by only the NFRA and not the institute. So only to these companies of these, where you are auditor of such a company, you should be worried about NFRA. If it is doesn't coming under NFRA, then then also the disciplinary committee is there. ICAI will take a very stiff action, but NFRA will be even tougher. That's the point. Okay. Again, I will tell you, so I'm preempting the auditing topic, which is there. You there also, most of the time, innocent auditors are penalized. Not because they have not taken the due care, but because they have not documented it. So the auditing professor also will, I'm sure, tell you this, but from a senior chartered accountant with, as already mentioned, 38 years of experience, believe me, it's documentation that's going to speak, not you. So tomorrow they will ask, okay, you asked him, where is the proof? You told him, where is the proof? And nowadays, it's better to put everything in email and be happy. Save it, keep it in the folder, ready. Whenever there's called for, here, take it and show. You are safe. That is the only defense. Anil, you are asking certain questions, but I wish you wouldn't ask such questions because this is not a fair question. Got it? If there is nothing called CA versus NFRA, maybe unless the CA is going on appeal. One. Two, there is no question of ICAI supporting anybody. ICAI is an independent professional body. It has nothing to do with me or NFRA. At best, if NFRA wants any information about me or you, Institute will provide. That's all. The Institute is an independent professional body. This question itself is very uncharitable for the Institute. Please don't ask similar questions. There is no question of Institute supporting member or NFRA. They will be neutral. They will say, come on, do it. That's So don't mistake me, but sometimes it becomes embarrassing to answer such questions in a public forum. So I will repeat, for the sake of clarity, the Institute of Chartered Accountants of India is an independent professional body. Okay, it is here to facilitate the profession of accountancy, and so it will cooperate with the NFRA by providing the data if any called for. Thereafter, it is between the member and NFRA, and it is for the member to prove that everything was done. Okay, for which he is definitely entitled to take support, legal support, whatever. It's up to him. So nobody has to help him or support him. He can as well, because when he undertook the audit assignment, he didn't consult the institute and do it. So now why should the institute? The institute is not bothered. On the other hand, if NFRA is not applicable to that company and there is a complaint against the auditor, the institute will take stiff action against the auditor if it is the disciplinary body. Here it so happens that for these companies, the disciplinary action is going to be done by the NFRA. So in a way, the ICAI's role is going to be done by NFRA. That's all. So there is no question of your question cannot be answered by me, other than to say again and again that institute is an independent body. Thank you. I'm sorry for, idea is not to say you are wrong, but to humbly request you not to ask similar questions in future. Ask a genuine academic question. I will definitely answer you. Please do not ask a question that is provocative or calling for a opinion. Even an opinion on a professional matter, yes. For example, sir, what is your view on this section like that? That is okay. On such issues, no. What is your view on the latest NFRA rules? What is your view on this, that? I'm not supposed to express any views in this forum. Okay, please don't ask me for such. Thank you. Okay, now come to a very important issue, which is listed companies and other prescribed class or classes of companies, except 1% companies and small companies. So, let's see. Term of auditor is 5 years. For a firm, it is 2 terms of 5 consecutive years. But 139(2) says certain types of companies shall not appoint or reappoint an individual as auditor for more than 1 term of 5 consecutive years. And in case of an audit firm, for more than 2 terms of 5 consecutive years. Right? So now, normally an auditor can be appointed for consecutive terms of 5 years, forever. But for certain classes of companies, there is pooling period or what we call rotation of auditors. So if it is an individual, for listed companies and certain prescribed, which you will see who they are, prescribed class or classes of companies, the auditor shall be rotated. So at the end of 1 term of 5 consecutive years, if it's an individual, he cannot be reappointed, shall not reappoint somebody else. Similarly, an audit firm, first period of 1 term of 5 years over, 1 more term of 5 years possible. Beyond that, no. So in a way, so it will be wrong to say 10 years. Because it is not 1 term of 10 years. It is 2 terms of 5 consecutive years. So at the end of the 5th year, at the AGM, the 6th year AGM after this, there will be the 5th AGM after this, there will be a question. If it is a firm and you want to continue them, you can go another 5 years. But if it's an individual, no. with that, you have to change. So that is called rotation of auditors. What are the prescribed classes? Be very careful. Because for these classes of companies, rotation has been prescribed. So all unlisted public companies, listed companies are covered. Listed companies directly covered. Other prescribed class only we are now seeing. So their unlisted public companies having paid up share capital of 10 crore. All private limited companies having paid up share capital of 50 crore. So if a private company has borrowed, I'm sorry, if it's having a paid up share capital of 5 crore rupees, sorry, 50 crore rupees, sorry. All companies having paid up share capital of below threshold limit mentioned in A and B above, but having public borrowings from financial institutions, banks, or public deposits. Only three categories. FI. See, today there are not many FIs. Okay. Maybe some state financial corporation, somebody. All the financial institutions have converted themselves into banks. IDBI Bank, ICICI Bank. Only IFSC, IFCA is there, no bank. ICICI Bank. UTI became UTI Bank. Then they got into deep trouble. So they changed the name to Axis Bank. Okay. And so on and so forth. Right. So whatever. All the specialized financial institutions found that they had nothing, no work to do. They were wasting their time, public money. Therefore, quietly, the government took a decision that no more need for financial institutions. We'll go for, they gave it a fancy name, universal banking. And all these fellows became banks. Okay, etc., etc. Right. So, and very successful banks also. ICICI Bank is one of the largest private sector banks. The government disinvested, and it became it has become one of the largest, right? Possible, I think, the largest private sector bank. But in terms of, I think there's a stiff competition. In terms of quality, I would say HDFC Bank would be better. But ICICI Bank also is a large bank, private sector bank. These are all HDFC Bank, ICICI Bank are all classic private sector banks, very successful, highly profitable private sector banks. So all companies having paid up share capital or below, but having public borrowings from FIs, banks, or public deposits of rupees. So in total, if all these total up to 50 crores or more, then rotation of auditor. See, idea of rotation of auditor is the assumption is that if the same person continues for a long period, there will be a collusion, there will be a friendship between the management and the auditor, and there could be a possibility of fraud, etc., etc. Of course, nothing wrong in rotation, and this is again arising out of Satyam, the fact that the auditor could be there for a long time and become close to the management, etc., etc. So OPC, but in this, even if a OPC or small company is satisfying this criteria, because today they've increased the small company limits. Therefore, 1% net worth and turnover. So if in case this goes up also, if the 1% company and small company excluded, other than 1% small company. Okay. So in these cases, unlisted companies, individual can be appointed for only one term of 5 years. Firm, 2 terms of 5 years. After that, they will be removed and another new Naya auditor will be appointed. Sir, government companies, if you see, in case of unlisted company, both conditions, or whenever, friends, whenever there is nothing here, whenever there is nothing here, it is or. Whenever there is nothing here, or. Because if they want it to be both, then 100% they will put and there. If and nahi hai to, straight away you can assume that it is or. So even if one condition is satisfied, it will be. But good question. Thanks for the good clarificatory question. And it's a good question because normally, people may not have asked it. Sometimes, these questions will help everybody. Correct? Correct. So I hope Mr. Syed Hussain is happy. Government companies, let me make this big. Yeah. So in government companies, how many auditors appointed, and private company, how many? Sir, minimum one auditor, sir. In case the company wants, depending on the size of the company, they may have joint auditors, 2, 3, like that. But for example, public sector banks have 4 central statutory auditors, 4 of them. So depending on the size, again, 2, 3, 4. Sometimes they have only 1. So there is no prescribed limit. It's up to the company. And government company also only 1 auditor. There's no need for 2 auditors, 3 auditors. Depends on the stage. One more thing you remember. For government auditor, there is no need for rotation, 5 years and all, because fellow is appointed only for 1 year. Do you remember? See, your problem is some of us are forgetting what we learned and asking. Okay, your question was how many auditors? Sirf a key, only 1. If you want to have more, that's the board ka call. The board of directors recommends we need 2 auditors. That depends on the size. Okay, but no statutory compulsion to have more than 1. Under the Companies Act, only 1. But there are companies where there are 2 joint auditors, large companies. And even I feel that it should be compulsory for certain large listed companies to have 2 auditors, 2 joint auditors. And in my view, for listed companies with certain turnover of more than certain thing, there should be joint auditors, and 1 auditor can be appointed by the board, and another auditor will be selected from a panel, SEBI panel, and SEBI will appoint. Or both can be appointed by SEBI from the panel, like that. Whatever. So that there will be we might think Big Four means it will be. Agreed. Big Four is definitely far superior to everybody in the world. But if there is one more auditor there, audit firm there, the Big Four also will be a little worried. What happened in Satyam cannot happen, because the second guy will also be watching. He may not be a huge firm, but the partner will be there. The minimum criteria will be there. Now 15 people are going to go there, sit and ask. So definitely there will be a lesser chance of collusive fraud with the auditors. So these are larger, wider thinking. My only view. Now, as of now, only 1 auditor. For non-government companies, term of audit is there. In certain cases, rotation is there. In other cases, no rotation. For government company, every year auditor will change. CAG will appoint. In some cases, the CAG may appoint the same auditor for 3 years, but that's again CAG's call. Every year, auditor will be appointed afresh. Correctly so told by Mr. Anil. Thank you. And in last slide, I don't know what you mean by that. Kindly elaborate. When you put such comments, kindly elaborate, because see, in a normal class, you can talk and explain to me. So in this type of a situation, you have to be more elaborate in your comment. Which last slide? Maybe the last slide that I showed, I have explained. An audit can assign only 20 audit. No, ma'am. At any point in time, a member, a partner, or an individual cannot audit more than 20 select those types of companies. So it's a constant watch out. There is no time period. See, every time you're getting a new assignment or a new audit, you have to go and check up your current quota and see whether you are exceeding or not. Every time you have to do it. I think you have to wrap your mind around the concept itself, first of all. 20 audits is a limit in that. You understand? So you start acquiring audits. And that too, see, private companies of a certain category are exempted. Don't include. Only those companies that are covered, you include. Keep counting. Maybe you'll have a small register or notebook where you'll write A audit, B audit, C audit, D. When it reaches 19, you have to be worried. So that when you get the next company, your quota will be completed. When you get the 21st company, you are not eligible. That is what it means. NFRA unlisted company, there also are only, ma. In fact, when I was teaching in accounts, I very clearly told or. All are or. In fact, when I was teaching NFRA, very clearly I mentioned that it is or. This was taught to you in accounts of auditors, accounts of companies also. At that time, I very clearly mentioned. Okay. So when you said in the last slide, it was a little vague. Otherwise, it's or. Whenever and is not there, it is or. Okay. Good question. Thank you for your question. Okay. Now, an individual auditor. See, remember this rotation of auditors will apply only to the selected group of companies. Only to this. Other companies, you can have auditor for life. In fact, for certain companies, I have been auditor for now 38 years now. Our firm is completed 50 years. 1973 started by my father. So our firm has been auditor for many companies for 40 years, 40 plus years. Some companies have celebrated their 50th year, and we have been their auditor for almost for that lifetime. For 45 years, we have been there. Okay. And in fact, recently one company, my father and I, we were invited for the 50th year celebration. So happens that we had been there for the 25th year celebration also. And they were mentioning that, that the only, they had called all their business associates and said the only group which has been with us for the last 50 years is this company, which they have been there with us like that. And this for not for promoting myself, but to say nothing wrong in being there. And because of that, I don't think over the last 50 years, we have done anything unethical or anything supporting. We have always been strict. And on the other hand, they respect us because we ensure that they are compliant. So we are strict. Okay. We will not permit. They know it. Okay. So I think because of one company and one auditor, a whole profession should not be blindly accused. But that's no other way. We will be blindly accused. Okay. Take it in the right spirit. And further make ourselves more honorable and more ethical. Okay, Mr. Murli. Even at the cost of irritating somebody that I'm slightly moving away from the topic. The only way to be ethical, my dear friends, is to not give too much importance to money. Not to give too much importance to money. The minute you don't give that much importance to money, automatically ethics will follow. It is only when you give too much importance to money. I use the words very, very carefully. Too much importance, too much importance. I'm not saying don't give importance to money. Money is important. Too much importance. And make that into some kind of a life goal, earning money. Then there's a chance that you would be misled into unethical. Most of the time, unethical behavior coupled with greed. So the greed is not there, then generally unethical. So the best thing is to be not. So there, a slightly philosophical attitude would definitely help you. Okay, help you and be happy with what you have. That's what I always quote. The very famous first verse from the Bhajagovindam. Bhajagovindam is called Moga Mudgara, where Adi Shankara was clearly, it was a hammer with which he was hitting you. And the first thing itself, Muda Jahihi, Dhanagama Trishna. Dhanagama, not Krishna, Dhanagama Trishna. That's what I said, greed, need. Krishna is need. Okay. Dhana Agama Krishna, the need to earn more and more money. Muda Jahihi. Oh fool, stop. Desist from this need to earn more and more money. Yellabase nijakarmopattam vittam dena vinodayachittam. Whatever is earned by straightforward livelihood, straightforward, shall we say, methods, be happy and contented with it and lead your life. So sorry for, I know many of you are getting angry with me, but see, sometimes, we have to add this as senior member. If this philosophy, then there is no way you will be unethical. So try to incorporate this in your lifestyle from now on itself. Suddenly at 50, you cannot become ethical. If you are not ethical at 21, you will not be ethical at 60. Okay. Suddenly you cannot become ethical. Or unless some major problem happens and you get into deep trouble, then you realize, and no, let that not happen. Buddha Jahihi, Dhanagama Krishna. Illabase Nijakarmo Patam, Vittam, Dena Vinodage. Whether you are in service or whether you are in practice, don't worry. The devil is always behind your back, tempting you. Don't think that in service there won't be any temptation. There are also temptations. Muda Jahihi, Dhanagama Krishna. Always keep that in mind. That line was not meant for you. I keep repeating it to myself. Muda Jahihi, Dhanagama Krishna. Enough. Don't make your money your lifetime goal. It is important. Don't make it a lifetime goal to the cost of everything else in our life. Don't do that. So, okay. Having given you these humble suggestions as a senior member of the profession, I'll come to this. An individual auditor who has completed his term, one term of 5 consecutive years, shall not be eligible for reappointment as auditor in the same company for 5 years from the completion of this. So the point is, once that gentleman has completed his 5 years, another 5 years he cannot be reappointed in that company, in the same company. So cooling period is a cooling off period. 5 years. Okay. Similarly, an audit firm which has completed 2 terms of 5 consecutive years shall not be eligible for reappointment in the same company for 5 years. So the cooling off period is 5 years. Don't come near, go like that. Okay. This was a major shock. This 5 years was a major shock. So what happened? This particular provision came in 2014. 2014. No, I think it came in 2014. So many auditors, many companies were feeling bad because, boss, there are many cases where the auditor would have completed, the firm would have completed two terms, or why 2 terms? 20 terms, 4 terms they would have completed. 20 years they would have been the auditor. So 3 terms they would have completed. So obviously, if this rule comes, next day they cannot be reappointed. They have already completed 5 years now. So then there was a need for some kind of, some grace period was to be needed. So both the Chambers of Commerce, ASSOCHAM, CII, Confederation of Indian Industry, everybody, and of course the audit profession, everybody went to the MCA and, they lifted their arms and they begged and said, please, don't make it immediate. The MCA also considered it and said, yeah, it's not fair because suddenly I can't come and tell you to get out. So we will give them 3 years grace. 3 years grace. Okay, you'll see this chart in the institute material, which I'm specifically not covering here because this started in 2014, right? 2014. I think it was 2000. Let us see. Act, commencement of this act. Okay, and this is what they are saying. Every company existing on or before, this is the transitional period. Every company existing on or before the commencement of this act, which is required to comply with the provisions as mentioned in the above mentioned points A to D. Okay, that is that cooling period and all, shall comply with those provisions within a period which shall not be later than the date of the first AGM of the company held within the period specified under subsection 1 of section 96 after 3 years from the date of commencement of this act. So the act, I think, was commenced in 2014. So they said, look here, section 96, you know that limit and all that, I don't know to bore you. So whatever it is, 3 years. So the first AGM held within the period after 3 years from it. So basically, current AGM, next AGM, third AGM, 3 years. So Let us say that we are now in, let us say that in 2014, okay, you are right in the middle of the audit season, June, July, August. So an AGM would be held. Okay. There you are allowed to be reappointed. Then the next AGM, no problem. Then the second year got over now. Then the third AGM, no problem. Then the third year will get over now. In that AGM, 3 years from the date of commencement, you have to be, which means that we have to understand based on the number of years. So as on the commencement of the date, if a company has completed 10 years, it can be there for another 3 years. Minimum you can be for 3 years. Don't worry. 3 years you go on, wind up and get out. Then you keep going down, 9 years. Then what happens? He's got anyway 1 year now. He's got anyway 1 year now. Plus 3 years of grace now, 4. Like that you keep working out here. You got it? Like that you keep, you know how you are better at numbers than me. Keep working. Finally, you come to, I've got 1 more year. 1 year I have done 1 year. Which means what? I've got another 9 years. Plus 12. Plus 12. So 12 years more. I was up. Just appointed. 1 year I finished. Then 12 years. Okay. Is that right, sir? So if you have completed 10 years also, you got another 3 years of grace. So I think it came up to 2017, I think. 17 was the deadly year when all the companies, they were looking for auditors. So we had about 4 of these guys, 4 or 5 of these eligible rotational companies. They were all literally like headless chicken. They were running around, not knowing what to do. They're coming to me, Srikanth, what to do. I said, what to do? Go and find some other auditor. No, you have been doing like this. How we can? Many companies, what they did now, they found some auditor, they got him, put him, but they called me and said, Srikanth, don't go away. I said, don't go away. How I cannot not go away? You're now you got another gentleman, a statutory auditor. You do any service you want, be around. What was your billing earlier? Said X, we'll pay that to you. What will I do? Do anything you want. We be a tax auditor. We'll ask the other gentleman to do only statutory audit. Give consulting to us. Be a tax advisor. We want you. I want you. Like that, the MD will say, okay, sir, we will do it like that. We used to say. Because see, they also feel, nah. So for you, that is not important. What is important is number work for you. I hope you understood. And all this is in 2014, ma. All this is in 2014. Okay. So in 2014, if a guy had completed 1 year, then he can be auditor for another 12 years. Correct? So 26. Firm. If it's a firm. If it's an individual, only 5 years. So you redo it for 5 years. 5 plus 3, 8. Like that. Okay. 5 plus 3, 8. But again, this will also be less. Now 5, 4, 3, 2, 1. So 5 means another 3. 4 means he will have 1 plus 3, 4 years. Correct? 3, 5 years. 2 more years plus 3. Like that. Got it? 3 more years plus 3, 6. Lastly, 7. So for an individual, 3, 4, 5, 6, 7. Got it? Here it will be 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. 12 years you can. If you just completed 1 year. 3 years grace period is there now. 10 plus 3. 9 plus 3, 12. So this is there in the institute material. The chart is there. But in my humble view, this is good. It's good to know, but not very relevant from exam point of view. Because right now it's old stuff. Because now we are used to this rotation and all that. Already 2 rotations have happened. Already 2017 one rotation happened. Then 17 rotation got over. 17, 18, 19, 20, 21, 22. So 22 AGM, new auditors. In other words, just as the 5-year got over, immediately all these companies called us and made us auditor again. So that from then onwards, 10 years. So which means 33. 23, 2022 AGM will be appointed for 23 March, 24, 25, 26, 27, 28, 29, 30, 31, 32. So 33 ka AGM, 32 March ka AGM na, we would buy. And then again we have to see what happens. Okay. So this is the way. But anyway, for a guy who's completed 10 years, 17 was the period. It was 3 years grace period or transitional term was given, right? So I have explained it. I'm sure some of you may have questions. And the chart is there in the institute material. If you want to read it, but we leave it to you. But this is the logic. So if you go through that, you will understand. Term of auditor is like if individual first AGM, he can do till 6th AGM. After that, he have to change. Correct. Then he can continue. Yeah, exactly. After the, 5 years come over, cool. Then come again. That's it. You're right. 16th AGM. Your understanding is correct, Mr. Mustafa. But you see, in the first, when the act was passed now, there were a lot of firms which have completed 10 years. What will they do? So for them, they gave the transitional period. Sir, in case of 50 crore paid up capital private company, auditor need not be changed. Who will monitor those auditors? In case of 50 crore auditor. Okay, what is your point? I'm not able to understand. Anyway, who will monitor MCA? Nobody else. Don't worry about that. Ministry of Capital. Why ICAI should monitor? I don't know why you are giving this extraordinary role to ICAI. ICAI again and again is independent professional body. It has clear roles. It is performing its role well. All this is to be done by the Ministry of Corporate Affairs. Okay, they don't worry, they monitor very well. Because see, we'll be seeing later on, in a short while, we'll be seeing that whenever you appoint, in fact, we saw that already. Whenever you appoint an auditor, you have to upload the form. So based on that, they will keep track of firms. And the balance sheet is there, everything is there. Based on that, they will keep track. And in case auditors are not reappointed. Also, the board of directors also have a duty, because this act applies to them. In case they do not do the rotation, then they will be penalized. So they will also be careful. They will be counting. So no need for ICAI to monitor. 5 years completed, there's gap of 5 years, then can be appointed. Correct, sir. Thank you. So, sorry for if my style is slightly different from other teachers. I'm not a pedant. I'm not a pedant. I can't be pedantic. I'll be a little casual and give some other than the topic stuff. There are some teachers who will strictly what is to be taught, they will teach and go. I will slightly pepper my discussions with certain additional, not totally away from your topic like yesterday. Like last class, we went into nuclear physics and relativity theory and all, not like that. That was very unfair on my part. But that was again, you know who. So this time it won't, from now on, it won't happen. Don't worry. After all, you are all chartered accountants. Why should you know Newton's law? Why should you know relativity theory? Why should you know genetic theory? It is not required for you. Okay. Okay, so this is the cooling off period, and I hope I have done this. If you still have any doubts on that 3 years transitional period, yeah. Thank you, Mr. Mustafa. Now, see, there is no, the 3-year grace period was beginning from 14. See, that's what the number game I told you now. So now when can that be? See, no, boss, you already completed 5 years, another 5 years. See, 2000, let us say your firm had 10 years completed. Like our firm, in all the 5 cases where we were rotational, we were 10 years completed. So we got another 3 years. Okay. Then 5 years. That's it. After that, where is the question of grace? Nothing, no grace. So 17, somebody else is appointed. 18, 19, 20, 21, 22. So 22 AGM, we are appointed. We will hold office till 33. So what grace is there? Nothing. Okay. No grace other than the grace of God. No transitional period. Okay. So we want. No need for that. Only for those of us who are caught in the middle, where we had completed portion, but only for those cases, there was a need for transitional. So instead of giving only for the 10-year completed Valas, they said anybody, whatever may be your balance term, plus 3. So for the 10-year completed fellow, the number is 0. So for him, it will be Straight away, 10 years or 5 years. Straight away, 3 years. Right? The 9 completed wala will have 1 year now. That 1 year you take plus 3 years. Like that you keep coming. Till you come to the one completed guy who would be having 9. Let's say this guy is going to be appointed at the AGM after the act came. Please note it, Your Honors. This firm is going to be appointed for the first time after the act came into place. Got it? Not earlier appointed. Company in this year, they have decided to appoint a new firm at the AGM after the act was commenced. Then straight away, what transition period and all? Straight away. Okay, no transition for this guy. Straight away, 5 years. Then another 5 years. The law will apply to you. Because you are not the auditor at the time of commencement of the act. Only after the commencement, somebody else was there. We are not going to appoint him. New guy is going to be appointed. That new guy, normal 5 years term only. Or if it's a firm, even if it's a firm, they will be appointed for 5 years at a time. If it's a firm, at the end of the 5th AGM, they can be appointed for another period of 5 years. That's all. Okay. So that's clear. Thank you for that. And let's move on with our discussions. This is a very interesting point because people will start thinking how to circumvent it. So they are saying audit firm having a common partner or partners to the other audit firm whose tenure has expired in a company immediately preceding the financial year shall not be appointed as auditor of the same company for a period of 5 years. Got it? If you see the example, you will easily understand. Same, if there are common partner or partners, then those other firms, which have common partner also cannot be appointed for 5 years. See, Ram, Rahim, Robert is a firm of chartered accountants, 3 partners, Ram, Rahim and Robert. Robert is a common partner in Robert Associates, an LLP, doesn't matter. So Robert is firm partner here and also in Robert Associates, which is an LLP. Now Ram, Rahim and Robert was appointed as auditor for Rainbow Detergents for 2 consecutive period of 5 years from 2016 to 26. Okay, so we are going futuristically. Now the company wants to appoint Robert as its auditor. Can they do so? So, in other words, Ram, Rahim and Robert's period getting over. So, Ram, Rahim, Robert cannot be appointed for 5 years. But Robert Associates is alag, it's a different firm. Now, why can't we? Cannot be. Cannot be. Why? Because audit firm having common partner or partners to the audit firm whose tenure has expired in a company immediately preceding the financial year shall not be appointed as auditor of the same company for a period of 5 years. Okay, so that is the point. Correct. Sir, listed or unlisted, they will clearly mention in the paper, sir. So if it is a listed company, they will mention, right, sir? If it is not mentioned, humble suggestion, it is unlisted. You cannot assume listed, sir. If for example, if nothing is mentioned, for example, here Rainbow Detergents Limited, nothing is mentioned, unlisted. But since they say that there is a rotation, we shall presume that Rainbow Detergents Limited is coming under the rotation of audit criteria. Okay. So, to answer your question on listed company, if they want that listed company to be there, very clearly they'll mention listed company, right? If not, they will straight away say, for example, internal auditors, CSR committee and all, they will give you a listed company and then they will quietly give you that the limits are not exceeded. So, I gave you an example like that. So what happened? The student in his eagerness, in his excitement, like that, he will see the limit. I know the limit is not exceeded. Therefore, no need for CSR committee. Was listed company. There is no question of limit like that. So in those cases, they will give the listed company. They will mention that it is listed company. So if they do not mention, it is unlisted. This is my humble submission to you. Okay. Correct. See, bank audit again comes under the Reserve Bank of India guidelines now. Bank audit. See, again, remember, there are private banks and public sector banks, government-owned banks. Now, government-owned banks come under the Reserve Bank of India. So, the Reserve Bank of India has its own panel, like the CAG. So, for public sector banks, the auditors are appointed by the Reserve Bank of India. Recommended by the Reserve Bank of India. When it is appointed by the board, if it is approved by the board and recommended by the AGM, they are appointed. Basically, so those auditors for government banks, they are audited, the central statutory auditors are appointed for 3 years. 3 years. Again, it's all circulars, rules are there, Reserve Bank of India guidelines are there. There's nothing. But they won't come under this category. They won't come here. But private banks, they are like any other limited company. So they will, in their cases, rotation will be there. They are also rotation. Most of them are listed only. So they will be having rotation. Okay. Good question, but this is the answer. But banks generally come. Regarding branch auditors of a bank, that again comes into the RBI guidelines. Again, the list of eligible branch auditors is taken. The panel is there. From that panel, they will select firms. Generally, they give for 3 years. There's no rule. Generally, RBI, when they recommend, they give 3 years. Generally. But there, the rotation thing won't happen because, as I told you, the 5 years no lights. For public sector banks, it's hardly 3 years. Within that, out. For private banks, normal rotation will happen. Okay. But even they may have a policy to change within 3 years and all that. Because, see, banks are more sensitive. So they may, to show that they are clean, they may want to change the auditors frequently. Nothing wrong in that. But generally, auditors for a private bank would be appointed for 5 years. So, under the Act, 5 years. Auditor appointment is for 5 years. Terms of 5 years. Which is a good thing that the MCA did for us. While bringing rotation, they also bought this 5-year freedom, peace. Once you're appointed for 5 years at a time. So for 5 years, you continue. Thereafter, you have to fight for yourself. Okay. Reappointment, etc. Yeah. Now, what I suggest, there are 4 questions here. So if you are going to give me an answer, please mention which question you are answering. 1, 2, 3, 4. So that I won't get confused. Okay. Right? Lemon and Company, Chartered Accountants, a limited liability partnership firm with CAM and N, is the statutory auditor of a listed company, Big Limited. See, my good friend whoever asked, I forget who it is. Do you notice here it's clearly given listed company? Why? Because if it's a listed company, straight away rotation will apply. Nagaraja. Got it. So when they want it as here, you can't say, hey, nothing is given, I will tell listed, you can't say. Here it's clearly given listed. So listed. They want, by giving that word listed, they automatically inform you that appointment of statutory auditor is subject to rotation and cooling period. So Mrs. Big Limited for past 6 years as on 1/4/2021. So statutory auditor of a listed company for past 6 years as on 1/4/2021. Okay, it's a firm, so one. Okay, now CAM is also a partner in another chartered accountant firm, Dew and Company. So CAM is also in Dew. Advise the company. Up to how many years can Lemon and Company continue as statutory auditors of Big Limited? What shall be the cooling off period for Lemon and Company? Okay. It's a firm. Lemon and Company is a firm, LLP. So what will be the cooling off period? So how long can they be? See, here and all, you should not take grace, ma. Straight away, you have to go by. They've already been for past 6 years. Correct. See, we do not know when they were originally appointed. Therefore, don't get into that mental confusion. Assume that this 6 is there. 6th year. So they have been reappointed. So another 4 years they have. Okay. Correct. 1 plus 4 years. Beautiful. Okay. 1 plus 4 years. Yeah. Once that 4 years over, then they have to come out. So 21, 22, correct? So 4 more years. Absolutely correct. Absolutely correct. Correct. Beautiful. All of you are absolutely correct. We'll come to the next question, which is answered. But so, what shall be the cooling off period? You also given the correct answer. So 21, as on 1 4. So 21 AGM, they would have been appointed for past 6 years. So they would have been appointed in 20 AGM. So they got another 5 years. So 21, 22, 23, 24, 4 years. So 24, 25 out. Correct. Thereafter, 5 years gone. Now, can Dew and Company be appointed as statutory auditors of Big Limited and its another subsidiary, Dark Limited, during the cooling off period? Dew has a common partner, Yum. Be careful. And a subsidiary, Dark. Poojaji is jumping to 4. I will first take 3. No, Mr. Adil Khan, you are given a single answer, no. Be careful, because it's a double-edged question. There are 2 questions here. You have to divide this question into 2 parts. Can Dew and Company be appointed as statutory auditors of Big Limited? Your answer is correct. No, because it has common partners. And it's another listed subsidiary, Dark Limited. That cannot be no. See, Dew Limited having common partner. Therefore, whatever applicable to Lemon and Co. company with regard to Big Limited will apply to Dew also. But regarding the subsidiary Dark, the law does not prohibit him from being appointed in the subsidiary. Note it, your honors. Kindly note it, your honors. Subsidiary not mentioned anywhere. Sir, you are 5 year got over in holding companies, sir. Why? I'll go one step ahead, ma. Lemon and Company can be appointed in Dark. Lemon itself can be appointed. What is that? Only for Big you cannot reappoint Lemon. Only for Big you cannot appoint Dew. But for Dark, you can appoint Lemon. Or usually that's what they do. They will exchange. One company they give, another they'll exchange and give. Like then companies also have to retain auditors. No? So they say, well, sir, you take the subsidiaries. 2, 3 subsidiaries are there. This year you do the 3 subsidiaries. Let us locate somebody for the main company. Then 5 years later, you come there, he'll go here or whatever we'll see, sir. Because in this case, Dark is listed. Many cases, unlisted subsidiary will be there. There they'll say you continue, sir, like that. And fees restructuring will be there so that to ensure that nobody loses anything. Can Lemon and Company be appointed as internal auditors of Messrs. Big Limited? And it's another listed subsidiary, Dark Limited, during here, Poojaji saying, no, Lemon and Company cannot be appointed as internal auditors of Big Limited or subsidiary during the cooling off period. Correct. Prerna is giving the right answer as of now. See, Mr. Anil, your answer does not mention which company, which firm, nothing is there. If you write like this in the exam, you are going to be in trouble. Mr. Nagaraja is saying not allowed, prohibited, section 144. Sir, Mr. Nagaraja, first I will make you understand. 144 is applicable when the firm is already the statutory auditor. Simultaneously, it cannot be internal auditor. But in our case, what's happening? Lemon and Company is ceasing to be the statutory auditor, boss. Then only the cooling period starts. At the AGM, you appoint somebody else now. I'm no longer your statutory auditor. Why I can't be internal auditor? Where is 144 here? समझ गए ना? Boss, you at the AGM, you appointed somebody else in there. Thereafter, I'm no longer your statutory auditor. 144 will not apply to me. Why I cannot be internal auditor during the cooling period? For big limited, dark limited, everybody. If I am wrong, correct me if I am wrong. I think all of you have. Sir, my answers are correct. Okay. If you say so, you are correct. Have you listened to the logic I'm giving, Ms. Pooja? I mean, I don't understand what the statement you have made. Are you saying that you are right? Then how about the logic? I think my answer, are you asking a question or are you making a statement? Your answer is wrong. If you're asking, because if you're making a statement like God, then I cannot answer you. I'm always correct. Midam makshyami aseshataga. Like Bhagavan, if you're saying, then what can I say? I'm only teacher. I can only teach. If you say I am right, then you are right. I am wrong. That's all. No. Please understand. First, you understand the subject. Sir, if you see, I got a little frightened by that. No question mark also. So normally a question is an interrogation. Is my answer correct? Okay, slight difference. My answer is correct. Okay, your answer is correct. What can I do? So no, your answer is not correct. See, friends, simple concept in here. First, understand one thing. The law only talks about not appointing a person as internal auditor when he is the statutory auditor. Now, once the cooling period starts, Lemon and Company is no longer statutory auditor. Therefore, 144 will not apply. Therefore, Lemon and Company can be appointed as internal auditor in big limited. Obviously, in dark limited also. Provided Lemon and Company should not be statutory auditor of dark. Got my point? Because then 144 will apply. So, if you understood the subject, then there is no doubt about it. You would not have any doubt. Okay. So, to correct answer for 4, Ms. Pooja is yes, Lemon and Company can be appointed as internal auditors of Big Limited since during the cooling period they are not statutory auditors and therefore the prohibition of section 144 will not apply. This goes to Mr. Nagaraja also. And dark limited, see, here you have to be a little careful. Make an assumption. Assuming that Lemon and Company is not the statutory auditor of dark limited, then it can be appointed as internal auditor of dark limited also. Okay, that's small assumption you make. Right? So that is the important point you have to understand. Right? Anil, I'm explaining again and again. I hope you have understood it. So don't keep on saying it cannot be appointed. I've been telling you why it can be appointed very clearly. Please I hope all of you have understood. Yes, absolutely. Absolutely. Ms. Tiwari, during the cooling period, how else will people like us survive, ma? See, the 100% you can be internal auditor. Our firm has been appointed. See, I'm telling you, they don't want to lose the relationship with a long-standing firm. They don't want, just like that, they won't make you go away. You've been with them for ages. The relationship is strong. So they will simply call and say what to do. Then finally they'll say, Srikanth, I don't want you to go, what to do. Okay, so we will take up internal audit. So W will fix the fee. We'll take up internal audit. Nothing unethical about it, boss. It's a different role. Listen to me, then you will only understand. See, Due and Company is a company with a common partner. Therefore, it cannot be appointed as statutory auditor of Big Limited during the cooling off period. Same as Ram Rahim. When there is a common partner, that common partner firm also cannot be appointed as statutory auditor of the company where they were sent out as on the rotation. So that is only big limited. With regard to dark limited, it is only subsidiary. The schooling of this prohibition does not apply to subsidiary. Therefore, during the cooling period also, due and company can be appointed as statutory auditor of that. But be careful. In case they are appointed as statutory auditor, then they cannot be appointed as internal auditor because then 144 will apply. Okay. So this has been explained threadbare, taking into account all the provisions of the law. सर कूलिंग पीरियड है भैया सिर्फ लेमन एंड कंपनी के लिए, ड्यू के लिए, एंड दैट टू ओनली विद रिस्पेक्ट टू बिग लिमिटेड है. प्लीज अंडरस्टैंड, कूलिंग पीरियड है ओनली फॉर लेमन एंड कंपनी with regard to big limited, due and company with regard to big limited. For dark limited, there is no need for cooling period because it is subsidiary. Babaji, I hope you have understood. Okay. See, problem is most of us, we form one idea. We are unable to break it. We want to be right. For that, we will twist the facts. We will confuse the law. But we will not accept that this is the correct law as applicable to these facts. It's a general human tendency. The desire never to be wrong. But ultimately, boss, remember, you're going to write these answers in the exam. There you can't ask, my answer is right, like that. It is right only. So, what is the understanding or learning and getting out of this? Before writing, think many times. Do not commit an answer unless you are 100% sure. That's all. My humble submission to you. I will always think 100 times before putting something. I will write it on paper, make out diagrams, pencil I will write, and then finally, once I'm 100% sure, then I'll start writing the answer. A little time it will take, no doubt, but the answer will be perfect. The humble submission to you. Please don't get angry with me or give me any negative comments. Correct, Steffi. You are right. You are right. You are right. You have understood. According to section 144, auditor cannot service as internal auditor when they are statutory auditor. But at the time of cooling period, they can be internal auditor because they are not statutory auditor. It means exactly that. Thank you, madam. Indirectly includes rendered through relatives. But common partners are there, no problem. No problem. That too, again, I'm telling you, boss, for dark limited, nothing applies. And for big limited also, Kanna, please understand, your firm should be the statutory auditor. Only then 144 will even apply to the situation. Why can't we wrap our mind around this simple point? Unless Lemon and Company is the statutory auditor, 144 will not apply, boss. Indirect, direct, blah, blah. Kindly. I mean, I'm surprised that you are not able to understand this simple point. Nine plus 33, 9 plus 4. 9 plus 33. 9 plus 4. 9 plus 1 more year normal plus 3. Total 4. Okay, 9 plus 4, not 3. 9 plus 4. That is 9 plus 1 more year. Naturally, he has not for 10. So that will complete 10 years now. Iske baad you got another 3 years now, transitional period. Now you have understood now. 9, he's got 1 more year. Normally, he's got a term. He has to complete that. Then it will become 10 plus 3 years transitional period. So 4. So 9 plus 4. So from that year, he can go another 4 years. Like that. Then like that, you can do for 8, 7, 6, 5, 4, 3, 2, 1. No, nothing. No cooling period for internal audit. It is up to the board to decide. There's in the act, there is no cooling period for internal audit, blah, blah. Only for statutory audit, they've given cooling period. Internal audit and all, it's up to the board of directors. Usually they will change within 3 years. Internal auditors will be changed once in 3 years, not even 5. For many companies, they have a rotational 3 years. The board will change within 3 years. Because internal audit is even more critical function. And the same person being there is not a good idea. Because new person will bring new idea and all that. So that is no statutory condition. It's up to the board to see. Grace period is applicable, but grace period will be counted the commencement of the act. Now we won't count another 3 years and all. Sir, how to make you understand? See, at the time when the act was passed, now there were many firms which had already completed 10 years, 8 years, 7 years. Now suddenly, you tell them, that's it, another 3 years later, you'll be, no, you have to change. Tomorrow you have to change. They cannot change now. So at the time when the act was passed, came into being now, and this rotation thing came, the time they said like that. Current scenario, no example. If you are appointing a firm now, they'll hold office for 5 years. That's all. Current scenario was your firm is being appointed by one company 5 years. That's all. No grace, nothing. If you had been an auditor at the time of commencement of the act, only grace. I hope you understand. At that time, only grace. So if now you are going to be appointed, your firm is going to be appointed 5 years, another 5 years if you want. That's all. Clear? Now, if you want to appoint, first appointment now. Suppose you are holding office in that time, then. Sir, no grace period. Sir, this grace period is only there for the transitional. If you had been an auditor at that time when it was passed, only then this transitional provision will apply to you. So today, if you're going to be appointed for the first time in a company, it will be for 5 years. Individual, 5 plus 5, 4. I hope you are clear, Mr. Syed Hussain. So instead of saying grace is not applicable now, I humbly request you to understand grace, when it was introduced and how it was given. Once you understand that, now this question will become redundant. So only those firms which were there at that time when the act was commenced as auditor, now only for them this will apply. Okay, for them it will apply. And for me, up to 26. See, if your firm had up to 26, it can continue. Up to 26, it will continue as an auditor. Okay, in some cases. Okay. So, in case of one of the partner resigned after 5th year after signing the final report, sir, can the firm be? No, sir. Firm cannot be reappointed. Just because partner died, no. To answer your question straight away, don't waste my time arguing. Take it as the final answer. It is the firm that has to have the cooling period, not the partner. Okay, merely because the partner is resigning, the firm cannot escape the cooling period. Okay. So I have answered your question. That's it. Because this question itself is redundant, but still I'm answering it. Resigning will not save you. That means every partner will resign now. You keep resigning partners and taking the audit now. Firm cannot be reappointed, boss. Your partner can resign, go. What is my problem? Okay. See, in many of these questions, if you just think a little, you'll get the answer yourself. Straight away. Okay. Good job. I mean, I'm very happy that so many questions are coming. Understand the provision clearly, then you will understand the answers. Okay. Sir, in case in case one of the partner resigned after 5th year, can the firm be appointed? Yeah. If it is, firm. So this is the first period of, okay, reappoint, definitely. There again, the answer is straight. Because this fellow resigned, the firm is not ineligible. Mr. A signed it. A resigned. So what? Firm can be reappointed for another 5 years. Sorry, I will take back my original answer. Now I am giving you for reappointment. You are asking appointment now. So even then I should have understood. See, I don't know now whether this firm has completed 2 periods or not. See, I don't know. So if the firm has not completed 2 consecutive 5 years, so first 5 year got over, the partner resigned, no problem. The firm can be reappointed for another 5 years. Okay, sir? Correct. So just want to be clear about my answers. But if it is a 10-year over, even if the partner resigns, you cannot get another 5 years life. No. That's all I'm trying to say. Okay. Now, this is about maximum number of audits, if you remember. So, this is the count A4, B6, C10. What is the maximum remaining in the name of ABC and Co? So, you can give answer. Sorry, this is not 11, this is 1 and 2. Once again, I'll correct it so that you won't have any doubts. This is okay. So maximum available for ABC and for A, B, and C. That is just, you should know how to reduce from 20, that's all. Multiply by 20 by 3, like that. Yeah. Correct. Ashish Rao, you are correct, sir. Each partner can take 20. So first of all, freeze the total 60. 60 minus 20. That means 40 companies they can do. 40 companies they can do. But that 40, you cannot just like that, any partner cannot do. So you have to, that 40 will get distributed as Mr. Adil Khan has rightly given. A will get 16 because he's already got 4. Another 16 he can take. B is got already 6. So another 14 he can take. C is already got 10. So another 10 he can take. So in total, if you total up Adil Khan's answer, 16 plus 14, right? 30 plus 10, 40. So answer for 1 is 40. Answer for 1 is 40. Answer for 2 is, this is 40. Here it is A 16, B 14, C 10 equal to 40. So same 40, but it is distributed. So the point we need to understand here is there is an upper limit and a sublimit. So it is, the upper limit is 20 into number of partners. 20 into number of partners. That means 3 partners, 20 into 360, upper limit. But that sublimits are there. Single partner cannot be more than 20. So based on that, we allot the audits. The remaining, these 40 audits, which I can still do, A can do 16, B can do 14, C can do 10 only. Because already got 10 now, so only 10 he can. That is the answer. Correct. Maximum allowed is A20, B20, C20. Total firm ka 60. Like that. Beautiful, sir. All of you got it. I'm so happy. Now, we have come to a nice point to stop. We have seen the transition period also. And the members can also resolve to provide an audit firm appointed by them. The auditing partner and his team shall be rotated. The partner himself can be rotated. Within this 5 or 10-year period, not 10-year period, they can say only one partner should not audit. That's up to the members to decide. It's not compulsory. They want, they can. They can also see, here is what they say. The audit, the members may resolve. May means option. If the company members want, they may resolve that the auditor shall be conducted by more than. So having more than one auditor is a choice. Okay. So this also we have done it. So in case of auditor, the period for which the individual or held office. Oh, I'm so sorry. I'm so sorry. Let me do one thing. Yes. One second. I don't know what my battery. So, in case of auditor, the period for which the individual or firm has held office prior to the commencement shall be taken into account for calculating fine, which is what we did now. For calculating this transition period, we took his existing period. So, in case he has completed 10, the firm has completed, they got another 3 years. Like, okay. So, if there's a network of audit firms, see, in addition to common partners, there are many cases where the institute encourages network. So, there will be different firms across India who together form a network of audit firms. So, unconnected firms, there won't be any common partners, but they are networked. There is one single network. They'll operate with a single brand and all. Idea is, without losing their individual identity, they will have a commonality. Like that. Now, incoming auditor of audit firm shall not be eligible if such auditor or audit firm is associated with the outgoing auditor under the same network. So, A and Co is in the same network as X and company. Now, possibly some LPG network like that. Now, A and Co is also part of that network. X and Co is also part of the network. Now, A and Co outgoing. X and Co cannot be incoming because they are part of the same network of firms. A break in the term of continuous period of 5 years shall be considered as fulfilling the requirement of rotation. Okay. So, what happens is, if you're there for 3 years, then you can take a break for 5 years. And then again. But that's stupid. Nobody will do that. You'll as well go for a role period. Okay. If a partner who is in charge of an audit firm and also certifies the financial statements of the company retires from the said firm and joins another firm, friend, note it, he resigns here and joins another firm. Such other firm shall also be ineligible to be appointed. Got it? And again, this is when the period is over. So, 5 years over, 10 years over. Now this partner, what it is, he resigns and joins another firm. Sorry, that firm also ineligible. After completing 10 years, quietly you cannot resign and go to some other firm. And no, that firm also be eligible for a period of 5 years. Okay. Resigning will not save you. Okay, wonderful. We have come to a logical point where beautiful, Mr. Raj. So we have come to a point. I'll have a small break, which after which we will take a small break. So Okay. Welcome back from your break. So we move on from appointment to removal, sort of resignation, etc., etc. So from coming in to going out. One easy and quick method is casual vacancy. Easy to understand. We already saw this term now when we saw disqualification. Where an auditor acquires any disqualification, he will vacate office. And there's a casual vacancy. What is the word casual? In your, maybe if you're working somewhere, you might have heard of the term casual leave. There are other leaves wherein there is a designated thing, like, sick leave, like that, whatever. Whereas here, there are many reasons, miscellaneous reasons. Any one of it is a casual reason, casual vacancy. For a casual vacancy, for a government company, first let's finish government company. Obviously, who appointed the auditor in the first place? CAG. Now, if there is a casual vacancy, you inform the CAG, fold your arm and wait. Within 30 days, CAG has to appoint. In case the CAG does not appoint within 30 days, board of directors within 30 days. So what you should understand, casual vacancy can be filled by the board of directors. Are you able to understand? For a government company, any casual vacancy can be filled by the board of directors. Initially, CAG. If the CAG does not appoint within 30 days, then board can itself appoint within 30 days, and that's the end of it. Casual vacancy. In the case of other than government company, again, here the vacancy is divided into two categories. One, casual vacancy due to resignation, special category. Other cases, other than resignation, the board of director can appoint the fresh auditor within 30 days. So my understanding is, in case of casual vacancy, other than government company, other than resignation. In case of casual vacancy, other than government company, other than resignation, board of directors can appoint within 30 days. But if it is resignation, then approval of members required at a general meeting convened within 3 months of recommendation by board. So there is a casual vacancy, then the board should recommend and then hold a general meeting. And at that general meeting, the members will appoint. The reason for this is resignation is a serious thing. Because the auditor is resigning. Why? Why should an auditor resign? If it is for personal reasons, okay. But if it or some other reason, or maybe this company may be the 20th company. Now that gentleman has got a more lucrative assignment. So he says out of this 20, he has to select now, which is the least PV remove. So he is vacating. That is not my problem. It is his reason. The actual vacancy. Whatever. Due to professional reasons, whatever. But suppose there are some serious discrepancies in the accounts. The auditor has pointed it out. The directors don't agree. They also irritate him and insult him. Or in general, they don't cooperate with him. So he says, nonsense. I don't want to be an auditor. I'm resigning. Why I'm resigning? This is the reason. So in those cases, the members should know that the board of directors is behaving like this. Therefore, where a casual vacancy is due to resignation, the board cannot appoint. They have to go to the members' reason for that, and then only that. And that fellow who is appointed in the casual vacancy by the members will hold office till conclusion of next AGM. Right. So this is common for all casual nominees till the next AGM. Then again, you have to appoint a 5 years term. So the idea is this is a stopgap arrangement, quick. I also told you the post of an auditor should not be vacant. So if you don't fill it, then central government gets the right to fill it. That's what I said. With the AGM, the auditor will hold office till the conclusion of the AGM. In case he is not reappointed or no new auditor is appointed, then the retiring auditor may be reappointed, provided he is not disqualified. He has not given the company a notice in writing of his unwillingness to be reappointed. Okay. See, suppose there is a rotation, then he cannot be appointed if it is a rotation. Rotational case is gone. 5 years over, 10 years over. Chal. A special resolution has not been passed at that meeting, appointing some other auditor or providing expressly that he shall not be reappointed. So later on, we'll be seeing. At an AGM, you may decide not to reappoint this guy, expressly resolving that he shall not be reappointed. Or you may appoint some other guy. In those cases, the retiring auditor cannot claim automatic reappointment. But if no such resolution has been passed, and he is not disqualified, and he has not given the company a notice in writing of his unwillingness. Okay. Here, these are simultaneous conditions. And he is not disqualified, and he has not given the company in writing, and special resolution not given. Okay, where at any AGM, no auditor is appointed or reappointed, the existing auditor shall continue to be the auditor of the company. Will sustain the new guy comes. There are companies required to constitute an audit committee under section 177. All appointments, including casual vacancy, under this section shall be made after taking into account the recommendations of such committee. So it's not enough if the board does it. Where there is an audit committee has to be there. So this is for casual vacancy. Let us see if you have any questions or queries, etc. Next AGM means AGM coming after that. Where is that exactly point? Next AGM. The AGM coming afterwards. Okay. From the date. Next AGM. Okay. Now removal of auditor can be before expiry of term of office or at the annual general meeting in cases of fraud. If you want to remember the section number, you can. So before expiry of term of, it's all in 140. So before expiry of term of office, 140 subsection 1, read with rule 7. Before the expiry of term of office means you want to chuck him out. He was appointed at the last AGM. Now he can hold office till the conclusion of the 5th AGM. Now before that 5 years itself, you want to remove him. Removal. Very serious. The company wants to remove the auditor before expiry of term of office. If you permit such a act to be done, then every board of directors will threaten the auditor. Am I correct? We will remove you like that. So there is a stiff rule, stiff procedure before expiry of term of office. Once appointed 5 years, you want to remove him, there's a heavy procedure. Okay. Of course, at the 5th annual general meeting, after this appointment, he will automatically come up for reappointment, or if it is rotation, then individual after 5 years, no. If it is firm after 5 plus 5, no. In any other case, you can reappoint him after 5 years at that meeting. No, at that, you want to appoint a person other than the retiring auditor, or you want to appoint you want to expressly resolve that the retiring auditor should not be reappointed. Then there is a special provision for that. Lastly, there is a fraud where the auditor is also involved. That's a different case. This again, you can see reaction to knee-jerk reaction to Satyam. So this is straight away. You want to remove him before expiry of term. Meaning, he has been appointed for 5 years. Now, in between, you are saying, I want to remove him. Boss, you can't do that just like that. You should show cross-professional negligence or arrogant behavior or something. But in most cases, the auditor will simply come before the tribunal and say, boss, they are telling all these things. There's no proof. No, look at my audit working records. I have asked him. 2.5 crore has been debited to P&L account. I said, give me vouchers. They are giving me some vouchers, hotel bills, bar bill and all. Now I'm asking, what is the business case for it? Propriety. Why did you spend it? They are telling you have no business to ask me. I'm giving voucher, audit it. Like that. I said I cannot. Because in CARO, I have to specifically answer personal expenses debited to P&L account. And I have my own suspicion that this is personal expenses. So these are the tug of war. I'm giving one example out of 100. I'm going for stock taking. It is not tallying. And they're giving vague replies. So I'm having my own. So I have decided to qualify. Now, if I qualify, they are in trouble. Therefore, they want to remove me. So where will the auditor go and tell this? Therefore, the law is very magnanimous and fair. If the board of directors want to remove the auditor, there is a procedure they have to follow, which is Rule 7. First, a board meeting has to be held to decide about the removal of auditor appointed under Section 139, which means the MD cannot take this call. MD cannot say, you get out. No MD can threaten the auditor. Okay. Or say something nonsense. No. Board meeting should be, at least there will be 5 other people who have to sign or who have to agree. And that too, removal of auditor appointed under Section 139. And then authorizing the filing of application to central government. So matter doesn't end there. You have to go to the central government, the regional director, and you have to make an application to the CG in ADT 2. So the CG will obviously, oh, you want to remove auditor? Beautiful. Come on, remove. Let us remove him. Let us send that fellow out. No. The CG will give an opportunity for the other auditor also. Yeah. Before passing an order approving, the auditor shall be given a reasonable opportunity of being heard. And at that time, that audit, if he is having enough evidence now, there is the end of it for the company, the board of directors, because everything will be documented by that auditor and filed with the RD. That's the end of story for the company. Better you keep quiet. You go to the, but if the auditor is unfair, if the auditor is high-handed, if the auditor is inefficient, if the auditor is negligent, then he will come and talk some nonsense before CG. CG himself will know, oh, this fellow is not aware of standard auditing practices. Fellow is not able to handle the audit. Therefore, they want to change. So they will give them. So it depends at that point in time how the auditor will represent the matter before the CG. So which means the central government, in this case, the regional director, hearing this matter is in a quasi-judicial position. He has to hear both the parties. Audi altram partem. Audi altram partem means hear the other party. Just because the company came to you with an application, you can't approve the removal. You call the auditor. Give him a reasonable opportunity of being heard. And he will put everything in writing and file. Was if after that, the regional director is giving approval, double problem. Because any action, there is a writ also. The auditor can move the High Court with the writ. And the High Court will then ask, how you remove? Quo warranto, what right you had? Certiorari est martimus. Reinstate him. Remove the approval given. Like that. Because it's an act of government now. I was not given a reasonable opportunity. Or whatever I said has been ignored in that order. Simply blindly passed an order. Okay. I don't have any appellate. Okay. Therefore, you have to protect me, Your Honors. Fall at your feet. Yes. Immediately they will certiorarized mandamus will go against the RD. Okay. Why make these points? Because in coming times, you and I have to be thorough in constitutional law. We have to be thorough. I wish that will be included in your syllabus. Already your syllabus is loaded, but they can remove something and add or whatever. I don't know. At least writ jurisdiction, constitutional law with respect to writ jurisdiction. I think it should be, even if institute is not including in the syllabus, it will be nice if you read it and become thorough with it. Not now. Once you complete also, in case you want to get into, even if you want to get into corporate employment, it will be very useful for you to know what are the various types of writs and when the High Court can issue, when Supreme Court, what is so many things are there. It's good to know it. But if you want to get into tax, then you should know it. If you want to, some of you are having the knowledge. I'm sure you are all highly expert in income tax. If you want to become tax expert, then you should be thorough with constitutional also. So once the board meeting is held, within 30 days you file ADT 2. The CG gives the hearing. Auditor is also heard. Then finally, the CG gives the approval. Then remember, auditor removal can be done only by passing a special resolution. Removal requires a special resolution. And the auditor is to be removed at a general meeting to be held within 60 days of receipt of CG approval. Sir, this is summary, sir. Let us say that the company goes to the central government. The central government gives opportunity correctly. Then they pass an order approving. Then within 60 days of receipt of CG approval, you have to remove him by passing a special resolution. Every condition should be satisfied. Okay. With that background, why don't you undertake this question? Mr. Sachidanand was appointed as the auditor of Moonshine Limited on 19/9/2019. Okay. So you don't like that date, change it. 19/9/2024. The company wanted to remove him before the expiry of his term. And for this purpose, the necessary board resolution was passed in 20/01/2025. Whatever. Take the same date also, no problem. 20/01/2020. The necessary application was made in form number ADT 2. Correct. On 15/2/2020. Should be done within 30 days from the date of board meeting. Correct? To the central government. Central government approved the removal on 3/3/2020. Correct? No problem. Fantastic. So Sachidanand gone. No. The company held its general meeting on 15/5/2020 and passed an ordinary resolution. So they have to hold it within 60 days. So 3/3 means 60 days. If you count March as 31 days, whatever it is, roughly, you will be having 2/4/25. So 2/5, maximum 3/5, your date is over. Okay. Because February has compensation. In 2020, February 29 days, so it will get compensated. So whatever it is, beyond 3/5, you cannot go. But they have held the general meeting on 15/5. Correct? Within 60 days, you have to hold and passing an ordinary resolution. Yes, sir? Video not visible, huh? No, sir? Once again, now? Now, am I visible? Thank you, sir. So let us see what all answers you are giving. Fantastic. Sorry, I didn't see the messages. I saw it only now. Yeah. To answer Mr. Mustafa's question, appointment topic is over. If you feel that anything is not covered, just mention the page number in the institute, I'll tell you. If you're going to ask me for if you're going to say that there's some topic uncovered, absolutely no problem. Maybe I missed out. Kindly give me the page number in the institute material which you feel was not covered, in case. But as of now, I've completed. For me, appointment over. Sir, you won't have to, for resignation, you need not wait for next AGM. Within 3 months of the board's appointment, board's recommendation, you have to write. Within 3 months. They are giving 3 months time for holding. 3 months, not AGM. From the board meeting now, when you have selected that auditor, now from that day within 3 months. Actually, that provision I still don't understand. Why 3 months? I still don't understand. That is how the law is. Yes, that is exactly the provision we are seeing now, sir. If he makes mistakes, you can. That is the idea. Oh my God, SR has not passed by the company. SR has not been passed by the company. Correct. It is not valid. First of all, they should have passed a special resolution. Instead, they have passed a. No, it is not about my capability, boss. Suppose I missed out something, quite natural now. Nothing wrong. If I have missed out, maybe some new provision. That's all. Nothing else. I don't think you're doubting my capability. I'm saying if I have missed out, my only request is in case there is some discrepancy between my slide and the institute material, then kindly, sort of give me the institute material page reference so that I can verify from the material and get back to you. That is all. The thing is, whenever you are having any questions where you're saying institute material says like this, absolutely no problem. Just to give me the page reference. Similarly, if any problem you are having, doubt, no problem. Please tell me which problem and which page. I will immediately read it and next class I will explain it to you. Court, Mr. Aditya, there is no court. It's only regional director. Four marks, how to write. It's a good point. See, I always give people a method of writing answers which goes like this. First of all, you write the facts with all the dates. But be brief. Because here the point is, so you can say that Moonshine Limited wanted to remove Mr. Sachidanand. The necessary board resolution was passed and ADT2 was made well within 30 days. The central government approved the removal on 3/3. And the company held a general meeting on 15/5, passing an ordinary resolution. No. Then, this is where you get your 4 marks, sir. You write this slide content according to section 141 or according to the Companies Act 2000, whatever, 1, 2, 3, 4, auditor shall be given an opportunity, special resolution. Therefore, since the company has passed an ordinary resolution and not a special resolution, the removal of the auditor is not valid. You have applied the law to the fact. Then finally, conclusion. The removal of the auditor is not valid. That's all. You will get your 4 marks. Well, you won't get 4 marks, 3.5 marks. If your handwriting is neat, and even if your English is not good, just mug up and write this. You will get your 3.5 marks or 4 marks. This is my humble submission to you. Okay. AB Associates, a firm of chartered accountants, was reappointed as auditors in the AGM on X Limited held on 39. However, the board of directors recommended to remove them before their expiry term by passing a resolution at board meeting held on 31/3/2021. Subsequently, having given consideration to the board, AB and Associates were removed at the general meeting held on 25/5/2021 by passing a special resolution subject to approval. See, this is well within 60 days. And they have passed a special resolution. But what is the problem? Subject to the approval of central government. That means central government approval should be appointed before. Before you remove him, central government approval should have been obtained. You cannot remove him subject to approval at all. No, that is not correct. Yeah, grammar important. You have spelled grammar itself wrongly. Spelling also important. Grammar, sorry. After all, I am a teacher. I am only correcting your spelling. What is this? Grammar. And Sanskrit, it is called Vyakaran. And in Tamil, it is called Ilakkanam. In Sanskrit, it is called Vyakaran. Okay. So, grammar. Grammar important. Everything is important. Language is important. Okay. But even in computational papers, language, but slightly in computational papers, language is not so important. So what we'll do, we will stop here and we will go to questions, MCQ, at least 3 or 4 questions we will do before we close the session. Okay. Next class, we will take up the balance and we'll finish up the topic. So quick MCQs. Let's see. What all we have covered today, we will try to do. We have all seen all this. Yeah, this is what we have just now studied. An auditor can be removed before the expiry of term only by. Sorry, just now you learnt it. 11 answer is correctly put B. B. Correct. B. Thank you. You are absolutely correct. Application for removal of auditor before expiry of term is filed in. Well, also B. 12B. Correct. ADT 2. Maximum number of company audits an individual can undertake. Individual auditor can undertake. Maximum number of was some of you are giving C. Yeah, correct. C. C20. C20 for C20. Correct answer is C20. Not 10 or 15. It is 20. Okay. That we saw it, I think, the other class. We saw that. Okay. This is actually one of the rights of an auditor. Let's see if you know the answer. 17. See, only is the problem there. Only. So he can see non-financial records also. For example, stock statement, production records, he can see that also. Because that's part of the audit. Auditor has right to see everything. Okay, even technical information I can take. Nothing. Even confidential information I can take. Because when I'm the partner signing and all my employees are bound by confidentiality, right? So the firm is bound by confidentiality. So it can be shown. Secretarial documents, minutes of board meetings, register of charges, everything. Okay, all times. This I have not taught, so I will not take it up now. But let's continue with our subject for another 5 minutes, and then we will close. Right? So, quickly we'll finish off this topic at home. See, friends, you want to remove an auditor at an AGM. You can't remove the auditor. Please note it. Even when you remove the auditor before the expiry of his term, within 30 days, you have to appoint a new auditor. Okay. You cannot leave the post of auditor vacant. Auditor will hold office till the conclusion of the AGM. Remember, whereas directors who are retiring by rotation will retire at the beginning of the AGM. When the AGM starts, the retiring directors will retire, whereas the auditor will continue till the conclusion. Before the conclusion, either you should reappoint him or appoint somebody else. Right. Now, here is the situation. Mr. A is the auditor of company XYZ Limited. He has been appointed. He is going to be, firm, sorry, AB and company and co is the auditor for 5 years. Or maybe rotation doesn't apply to this case. Let us go by that logic. So A is the auditor for this XYZ Limited. 5 years over. So at the coming AGM, we are going to reappoint A. You, Mr. B, C, D and all are members. They are getting the AGM notice 21 days before. They are getting the AGM notice 21 days before. Am I correct? The notice of AGM, annual report, financial, everything 21 days before. So they go through it to appoint Mr. A, to reappoint Mr. A as the auditor of the company agenda, to reappoint Mr. A as the auditor of the company for a period of 5 years till the conclusion of the AGM for the financial year ended, whatever. What? A? Never. So these BCD and all becoming hot, angry. Never. A is the rogue. I know that fellow. Every day in the club he is coming and drinking and going home, drunkard. He should not be the auditor. But my dear friends, an auditor is not to be judged by his moral behavior. He is to be judged by his ethical behavior. So an auditor may be moral, maybe a drunkard, etc., etc. But he may be a very, very efficient auditor and a very ethical auditor. I mean, this is a very tongue-in-cheek comment I'm making. Generally, we make moral judgments on people. Nothing wrong, because all of you are highly honorable people, so you can take a moral high ground when it comes to people who drink, etc. But that alone will not make him unethical or inefficient or unprofessional. So in the morning, the man may go to office at 9 o'clock, 9:30 sharp, and he'll be fantastic auditor till 7 o'clock. What he does after that is his business. I'm just making a point here. Whatever it is, BCD are all unhappy with that fellow man. They don't like him. So they want to never. They don't want. So they call another friend, okay, Mr. P. He's a chartered accountant. Mr. P, come. I will recommend your name. So now they want the company to appoint Mr. P instead of Mr. A. There is one option. To appoint a person other than the retiring auditor. Agreed. Or another option. They are saying, boss, you appoint anybody you want, yeah. I don't care, but not A. But not A. A should not be appointed. Like that. You got the point? So two things are there. Appointing a person other than the retiring auditor, or expressly resolving that the retiring auditor shall not be reappointed. So if you want to do this, then the members have to give special notice. Normally, notice is given by the company to the members. Friends, section 115 is not in this chapter. Section 115 is in chapter 7, management and administration. This would have been already taught to you. But just for recapitulation, I am teaching it again. So, under this section 115, where in this act special notice is to be given, it has to be given not less than 14 days before the date of the meeting. So you're getting it 21 days before now. Now, special notice cannot be given by one member, or rather, there's a requisite number. Members holding not less than 1% of the total voting power, or holding shares on which an aggregate of not less than 5 lakh rupees has been paid up, whichever is less. Whichever is less. So total voting power, you know the definition. If on a poll, if all the votes are cast, the total number of votes which can be cast is the total voting power. On a poll, if all the votes which can be cast. Remember, on a poll, for a company with share capital, on a poll, one share, one vote. For a company not having share capital, one member, one vote. For a company having share capital, on a poll, total voting power is one share, one vote. So if a company is having 10 lakh shares, paid up capital of rupees 10 lakhs, rupees 10 per share, rupees 10 lakh paid up capital, 10 rupees per share. Then the total voting power is 1 lakh. How do I get 1 lakh? 10 lakh divided by 10, 1 lakh shares. So 1 lakh votes, that is total voting power. Out of that, you have to calculate 1%. 1% of 1 lakh. 1% is 1,000. So 1,000 shares, that is 10,000 rupees if I'm 1,000 shares. If I'm holding, or if together we are holding 1,000 shares, not less than that, then we can. Or if it is much more, suppose the company is having huge 500 crore turnover, or 500 crore paid up capital, or 50 crore paid up capital, then 1% may be huge. Therefore, even if together we are holding 5 lakh rupees, it is okay. So that group of members will give special notice. It is sent by the members to the company not earlier than 3 months, but at least 14 days before the date of the meeting. So minimum 14 days before the date. So you need not wait for the AGM notice. You know that A is the auditor. This time I will take care of that fellow man like that. No problem. So you send your special notice 3 months before. Or at least when you get the AGM notice, A, never. Immediately you call up B, C, D and all. Hey, how many shares we are having? Okay, 1 lakh shares. We are having 1,500 shares now. No problem. We are eligible. Come on. Send a special notice. So they'll address it to the company. This is to give notice that we want you to appoint Mr. P instead of Mr. A. Or we want the company to expressly resolve that A shall not be reappointed. You appoint anybody you want. That is your call. Okay. Whatever it is, the company gets the special notice now. They have to now circulate it to all the members at least 7 days before the date of the meeting. Sir, it is not possible. Okay, give an advertisement in the newspaper. 2 newspapers, English and in vernacular. So this is 115. Now, for your information, in this act, special notice is required to be given only by 2 sections. One here, the other in directors. One is auditor, the other is director. So expressly resolving that the retiring auditor shall not be reappointed or appointing a person other than the retiring auditor at an AGM. That is here. In the directors, when you come there later on, you will see removing a director, removal of a director, and appointing a person in the place of the directors for it. That also requires special notice. Got it? So this is 115. The time is now already over. Let me not further tax you, but I will cover. Let us see. Yeah, we will come to fraud a little later. When I cover the duties of auditor, I will talk about fraud. Motivation for studying more. Okay, sir, I will conclude with this. When I was preparing for my intermediate exam, everybody felt that I am not going to clear that exam. And nobody will believe that this fellow is capable of writing and clearing that exam. So I used to cry and I used to feel bad. But still, I will continue to study. And my mother only will sympathize with me. So in the morning, when she'll be cutting vegetables, I'll be talking to her. She'll be motivating me. But sometimes I used to tell my mother one poem. In Tamil, I wrote it. But in English, I will tell you. They think that I am breaking stones on the mountainside. They think that I am breaking stones on the mountainside. They do not know I am breaking the mountain. So becoming a chartered accountant is like So when the people see us now, they will be thinking, what this fellow writing exam? What is this? Yeah, you are all incapable like that. They will say, don't worry. They think we are breaking stones on the mountain side. They don't know we are breaking the mountain. Okay. So it so happens later on, I wrote the intermediate exam and I cleared with an all India rank. But during that time, it was so frustrating. We are always afraid. Will I clear? Will I clear? So we have to keep on motivating ourselves. And one of the motivational things I used to say, they think I'm breaking stones on the mountain side. They don't know I'm breaking the mountain. So inside you build that energy. You will clear the exam and then you will prove to everybody who you are. Okay. This is what I can say. If I've done it right, I'm happy. And thank you very much. Wish you all a very great evening ahead. Good night. Bye. Yes, sir.